Hey everybody, for today's class in the careers in photography, we're going to talk a little bit about what your business organization or how you're going to structure or set up your business. Watch for another email, and in there I'll have a bunch of links and a PDF from the state of Michigan on starting your own small business, stuff like that. So there'll be lots of really good information coming in the other email that goes along with this notification to watch the video from the Google Drive as well. Okay? All right, cool. Let's get started then. So basically, what's your structure? All right. And it's okay, if you're part-time. You can still be set up any number of different ways, even if you're part-time, okay? So basically, you have a sole proprietorship. S-H-I-P, sole proprietorship. So that means it's just you, right? But that also means from a liability and from a tax and from a basic structure point of view that your business and you are the same person. Now that sounds strange, but bear with me as we get into this today. You'll see what I mean. So everything that happens to you happens to your business. The two are the same. And in fact, you will file your taxes under your SS number, your Social Security number, okay? So that's how that all works. You will run your business as if it is yourself. So the two are one. They're not separated at all. So you run all your taxes and everything through what's called a Schedule C on your 1040 income tax form. No big deal. Lots of people do it, and it's fine, okay? But then you have to think about, well, how am I going to keep things separate, okay? Because you don't want to be mixing receipts and expenses and all that stuff. So you have to kind of now try to keep things separate, right? And I always just used to use my American Express credit card, and I put everything on my business on that card. And then I knew that everything associated with the business was on that card. And there would be no having to go through my lines on my credit card receipts and see which thing was which. Where did I buy film? Where did I go to the photo lab back when we were processing film? Stuff like that. Gasoline, all kinds of things, right? So I just tried to keep everything as separate as possible. I had separate bank accounts at two different institutions. So I had my wife and I had our personal stuff at one bank, and I had my business account set up at another organization, a credit union, okay? Now we're completely separate. It's easy to keep track of everything because you don't want to commingle and then try to pull out the individual things, okay? That's just too much to try and keep track of, okay? So I want to think about, if you're going to be a sole proprietorship, set up your business so that you have two different bank accounts, all that kind of stuff, so you can keep things separate, okay? All right, cool. That'll help you out a lot. Okay, then you have another thing, which is LLC, which is a limited liability corporation. Okay, limited LLC. And you see a lot of these out now. They're very popular in the last, I'm going to say 15, 20 years. There were LLCs before, but they weren't as popular. Now they seem to be really popular to set up. So this is a way to limit your liability. The two now start to separate. There is you and there is a business, and the two are different. Okay, they each are living, breathing entities. Okay, So LLC is a good way to go. Again, I'm going to give you a bunch of links, stuff you can look up and do some homework on looking at business structure like that. Okay? Then you have kind of the basic corporation. You have an S and a C corp. There's two ways to run a corporation. S is kind of a standard, and subchapter C is kind of a special. Okay, I was a standard regular corporation for 20-some years, 25 years. I thought it was the best way for me to handle business. It also looked good because, remember, I was in more the commercial industrial arena. So I dealt with lots of larger, medium-sized, and larger companies and corporations. So when they saw that my invoice didn't just have my name on it, Images Audiovisual Inc. or Images Inc., Images Incorporated, right? It gave me some credibility. So that's one of the reasons I chose to become a corporation. It's a little more hassle to be a corporation. You have to keep a corporate record book. You have to have minutes once a year. You can hold all the offices, but you have to write stuff down. You have to have a meeting with yourself, basically. It's kind of a pain, and you have to keep a corporate record book and stuff like that. But I did as many things as I could with corporate money. Okay, so the key word here is I paid for things out of pre-tax dollars. This is big. Really, really big. So my company owned my car. So when I'd get a $500 check in and I had, say, a $400 car payment, I just made the car payment. That was an expense of the business. Okay, to own the car and pay for it. I didn't have to get that $500 in, take 33% out for taxes, then pay my car payment out of my essentially money left over to make the car payment because I owned the car personally. No, my company owned the car. Now, the caveat of that is, did I use the vehicle only for business? Well, of course not. Occasionally I would pick up my daughter from school, or occasionally I would go to the grocery store, or occasionally we would take a trip using that car. So you have to be careful. You can't claim 100% if you don't use it 100%. And if you have to be ready to back all that up, okay? It's kind of different with taxes, right? You're kind of guilty till you prove yourself innocent. Not really, but that's kind of the idea. So gasoline, oil changes, tires, brakes, all that stuff, right? I could write off as a business expense and thus lower the amount of money in the bank so that I didn't pay as much tax on what was left over, especially at the end of the year, right? So a corporation was a nice way for me to go, but remember, I was in the industrial commercial arena for my business. So it made a lot of sense to be a corporation. It gave me a lot of credibility. It looked good, that kind of thing. I could, walk the walk and talk the talk kind of thing because I was a corporation. And like I said, appearance is part of the game. It looked good. But this is a big deal here, being able to pay for stuff out of pre-tax dollars, right? So paying for equipment, cameras, lenses, film, whatever, out of business money, right, lowers your tax liability. But it also means the company owns all of that stuff. You don't own it personally. So there's lots of strategies to look at doing that. Now, I was a sole proprietorship for years. Lots of people are sole proprietorships, and there's nothing wrong with it. The issue gets to be liability, okay? Liability. Now, you're photographing a wedding, and you have maybe some light stands out and a tripod out, and you got a couple cords running on the ground, and you're posing the bride and groom doing something, whatever. and grandma gets up and walks over and doesn't see the cord or doesn't see the tripod leg sticking out and trips over it and falls, okay, and breaks her hip, okay. Now, you could say it was an accident. The family might say, well, if you had had that taped down, or if you had had orange marking on the end of your tripod, or if you had had an assistant there guarding it, well, that wouldn't have happened, so you're liable. It's your fault she fell down, okay? Now, if they sue you, and if you don't have business insurance, and if you don't have a liability coverage on your business insurance, as a side note, I always carried $1 million of liability insurance. A lot of my industrial and commercial clients demanded that I carried $1 million worth of liability coverage, an umbrella policy they call it. It's not expensive. But if you don't have business insurance and don't have liability part of that business package, okay, and they sue you, they can come and take your camera, your car, your house, anything else that you have as an asset that belongs to you. Because remember, in a sole proprietorship, there are not two, there is one. The business and you are the same. So that's the big difference with starting to look at structuring your business as either an LLC or a corporation, is that you have that division, that they are two separate entities, right? An LLC and a corporation gets a tax ID number, what they call a 38 number, okay? I still remember what my tax ID number was. I wrote it down so many times, right? So there's a difference between these two. Now again, nothing wrong with being a sole proprietor. Lots of successful businesses are sole proprietorships. But I would highly recommend that you get a business policy and that you get perhaps some additional liability coverage should something happen. Now you've got some money in the bank, so to speak, in your liability policy, which will help cover the expenses should you be found to be liable with something. So that's the big difference. Now there's very few times in court history in the United States where a person has been able to go through the corporation and get to the individual. They call it piercing the corporate veil, right? That's very, very few times that's happened, and it's extraordinary circumstances that it would happen, and I doubt it would ever happen to you. So it's worth the extra hassle to have your business set up in either an LLC or a corporation. So that's the big deal. The big deal is liability. And you're in business, and something could happen, and you don't know, and it's nice to be in that position where the two of you are separate. You have your business over here and you over here, and all the assets that you own over here, right, are not available to somebody wanting to come after them. They can only come after the business side of the equation, not you personally. So when you start looking at structure of business, there's a lot to it. Sorry, but there is. And remember, this is a business. You're there to make some money. That's the whole point, right? You're not doing this for charity unless, of course, you're independently wealthy and you want to, and then that's fine. All right, so that's a little bit about structure and business and taxes and liability is the big thing. And remember, look on the email. I'll send you a whole bunch of links to some websites and some other things for you to go take a look at and do a little homework and do a little research on all those things as well. Okay? Great. See you soon. Bye.